maybe this is something where it's like a cautious optimism that I proceed with. What's up, guys? It's Peak Octane, and I want to go over kind of how I'm feeling about the crypto market as a whole after looking through some things over the weekend, trying to kind of historically reference where we're at right now in the cycle and all of that stuff. So with that, I'm going to go ahead and I'm going to switch over right to the charts. As you can see, this chart is just a bunch of mumbo jumbo right now, most likely. I mean, it looks kind of messy, but hopefully we can explain some things that'll clear up some of what I'm thinking and why I'm thinking what I am. Now, what we have in the yellow and pink is kind of a reference point that you can tie into the cycle for Bitcoin specifically. And that is by looking at the performance from the Bitcoin halving date to the top of the following bull run. So this kind of gives you an idea of the exact timing of the cycle in previous history. So I pulled the dates from November of 2012 and July of 2016. Yes, 2016. And I overlaid them starting with the most recent halving date, which was May 11th of 2020. And I've overlaid this on the daily candle, and you can kind of see that we are actually, at this point in time, we are outperforming each of the previous two bull cycles that immediately followed a halving. I don't necessarily count this 2014 run because it did not immediately follow a halving. I'm not quite sure what led to that additional run in 2014. I don't know whether to anticipate that this time around or not. I'm not even going to try and guess that right now. I don't know enough of the fundamentals for that. But right now, this kind of makes me cautiously optimistic because obviously we still have a ton of room to the upside. But at the same time, in the very short term, so days, weeks, maybe a month or two, I am very cautious because we are extended above where we have been in the past. You know, in this region, obviously was pretty good because we were right in between this channel formed by each of the two previous bull runs. And then we kind of fell in line with the previous one from 2012 to 2013, and now we've kind of broken out above it. And you know, I as bullish as I was last week, this is something that I found over the weekend, and I'm not 100% certain how to feel about this, because obviously over the next year I'm going to be pretty bullish throughout 2021. At least I'm going to be pretty bullish on crypto in general. But maybe this is something where it's like a cautious optimism that I proceed with, because you know we do have room to the downside and still being in a quote unquote normal cycle. And another thing to look at is after this halving date, once we really broke away from this lower line of the pi cycle, we have not come back down to that yet. And quite frankly, we broke above the top line and we haven't even come back down to the top line since then, except maybe here in late January. I can't necessarily tell because of that overlay. But that's something that we need to pay attention to as well. Because if you look over here at the previous bull cycle, we had the halving in early July of 2016. And you can see we're hovering around this bottom line, kind of like we are following the halving most recently. And then once we get that breakout, we see a breakout to this top line. and then we're getting these kind of zigzags going from the green to the orange, and then we finally broke out way up here, and then even then we still come back down to the orange. So what worries me is we have quite a bit of downside action still to even reach the orange line if we even touch it just one time. As of right now, we would be looking at a 42 to 45% drop to get back down to that bottom line on the pi cycle. So that comes back to my point. I am cautious. 40% is no sneeze, especially depending on how much money you're actually using and how much of that portfolio or how big your portfolio is compared to the rest of your earnings. Now, in regards to following this too, it is kind of difficult because we only have these 2 data points that we are comparing. Technically, I would really like to have the data from the very first block until the quote-unquote top of the first run, but unfortunately, I do not have access to that information on this chart. This is just the chart that I have typically gone to every time in regards to chart analysis. Even if I wasn't in, I would still probably look in to at least get a little bit in. I mean, that's why I like the idea of dollar cost averaging. You try and time the market perfectly, you will get burned. That's kind of why I'm saying I'm cautiously optimistic, because obviously we've got 40% room to the downside to retest this orange line, but that does not mean we have to do that. We can go sideways here for a while, kind of like we did in this cycle in 2012 to 2013. We could easily follow along this for a little bit. I mean, we've already matched it up a little bit here. You know, if we match it up just at a different level, I mean, that's not a big deal. We're still technically, there's nothing wrong with what I'm seeing right now. It's just there's a little bit of caution in terms of being overextended previous trends. That's all I'm trying to say. So obviously I'm not a financial advisor. I don't have a financial advisor. So if you see anything in the comments like there were in my last crypto video, that is not me. That is an imposter acting pretty sus. Vote him off. If you get the Among Us reference, please leave a like on this video, or comment down below what your favorite color on Among Us is. But back to all seriousness, don't trust any financial advice stuff in the comments from somebody that has my name. I do not do that. I'll try and communicate with you guys on comments still, though. It won't be in terms of financials. It'll just be fun little stuff, like if you ask a question or anything like that. But anyways, thank you guys for watching. Be blessed. We'll see you on the next one. Bye.